stream going today, and I just upgraded my StreamYard account to a premium membership, the core plan they have, and I don't actually see the features being different yet, even though it just upgraded to that. So we're going to see about it. Let me go ahead and get the link shared out to this stream. I'm going to be doing another light work session today. We'll be doing another light work session. Oh, I am loud. Okay. Yeah, turn your volume down if you're playing me. I nearly blew out my ears. All right. And some of you may have seen that Jeff and I did a joint stream yesterday, but that's not on my channel. I didn't co-stream it, but he and I should be able to co-stream more regularly now that I have the core plan. My check finally hit. And let me see if there's another place I can drop it. Looks like that's just a place. Trying to see what other places I'm allowed to share my stream. Doesn't look like I have a lot at the moment. Okay. I'll try Abe's. If Abe doesn't like it, he can just tell me. But he seems like there's no rules against it. Yeah, so hopefully. Okay, great. All right, so let's go ahead, and I'm also gonna play this and at some point and listen to it with folks if we get enough of a crowd. So let's take a look at what I want to try and see as a good candidate for an article today. I'll just share my screen in a moment here. All right. I'm trying to get the. Okay. It is up now, so we can see what are the undercovered stocks today that popped up on the list. I'm going to refresh it again. All right, so there's Adobe. Adobe might not be a bad one to cover if it weren't already pending. I don't think I've actually reviewed them on Seeking Alpha yet. Applied Materials might not be bad. Not really in the mood for another semiconductor stock, though. Take a quick look at them. There were to file for the. All right, there we go. Let's just try this. Really, I can't snap to the. What a disappointment. Okay, so they sell the manufacturing equipment. Okay. Who are their big customers? Let's see. Are you saying who their customers are? It doesn't look like it. Okay. I'm not going to get into semiconductors right now. So, New Holdings. This is a bank. All right. Let's look at them then. I guess they are kind of new. They don't have a full decade of financial results yet. They've been growing quite a bit. What's been driving that? Are they? Are they really a bank? I don't know. Okay, Brazilian bank. I'm not gonna look at a Brazilian bank. Wait, no, let's go back. Let's go back to the we're gonna go back to the undercover list. Okay. Let me look at something that has a higher fixed minimum payment. So it looks like Kilroy would be probably an easy bet. Office REITs. Did I cover them before? I've looked at a lot of REITs. Let's see here. I have not looked at them before, so it's time to. Okay. I don't have a KRC in here. Nope. Okay, so I need to add one. All right. And make copy. All right, cool. Oop. KRC. All right, let's go ahead and get this data then. Okay, anyone popping in? Doesn't look like it. Okay, so the thing about office REITs is some of them can be good buys, some of them can be bad buys. If you've heard anything in the news over the past couple of years about commercial real estate, they have been struggling because much of commercial real estate refers to the stuff that businesses would use, like their office locations. And so when you see that something is called an office REIT, what that often suggests is that they're not getting as much rent as they were prior to COVID. So if we look here at the stock, well, technically this isn't a stock, but it's more or less the same thing. The price, it has shot down and never quite recovered from the pre-COVID levels. It started to come back, but as interest rates started to go up again, then that also hurt it. And the issue with the interest rates is that if any of the mortgages that REITs used to finance their property acquisitions were floating rate, the rising interest rates hurt them, in addition to the fact that they probably also have lower occupancy rates, which would reduce their rents, which would reduce their ability to repay the mortgage. So it's been a distressed area, but as you can see, the price is a lot lower. Let's take a look at actually the dividends real quick. Go to the dividend history. Okay, it's been growing since 2019. Interesting. So they declared a special dividend. Kilroy has actually not lost their dividend due to all of this stuff. It did not. That is intriguing. So the dividend isn't down. And it's one of the best prices it's ever been. I mean, yeah, it was in the 20s, but still, this is like way lower than what it used to be. That is fascinating. How long has this one been around? Oh, this goes way back. Okay. Don't take this to mean the up and down. Don't take this to mean that it'll go up to about 80 and then go back down to like 20 and then it'll go back down. We can't necessarily assume that, but and there's definitely been some ebb and flow here. So if it hasn't cut its dividend, why is it lower? That's the question. Okay, well, I need just to get more data. Get CapEx. A little bit of M&A, but not much. I'm not going to worry about getting the M&A detail. It's not really definitive. Okay, and where are their funds from operations? No one trickling in yet. Well, we got some people watching. I don't see any comments or questions. If you've got questions, folks, put them here. Maybe I need to add it to the stream. Let me do that. We're premium now, and yet it still has the live with StreamYard and live show stuff in the corner. Does it take a while after I upgrade for it to kick in the perks of the core plan? I don't know. But here, I'll throw that in. Ask anything about sucks. I don't actually see a lot of streams use the moving banner at the bottom. So I don't know how useful it is. Oh, there you are, WASF. I wondered if you might show up. You've been the most regular, even though I haven't done a bunch of these yet. How are you today? Let's see. All right. Where would funds from operation be? Would it be here or would it be probably on the income statement? Okay, here we go. Well, their payout ratio has been pretty low. That's interesting. It's very, very interesting. What is the secret to this one? What is going on here? Long-term debt. Definitely want to get that. Did they start taking on a lot of debt? Is that what happened? They did accumulate a bit more, but not substantially more by the looks of it. Let's boost. Okay, do that. How's their total dividend application been? Looks like they had some preferred shares that they had. They bought them back, got rid of that. Okay, not bad. Yes. And they have not been buying back. Or they have been buying a little common stock. Interesting. Very, very interesting. Not a lot of REITs doing that. Have they been issuing shares? Oh, they've been issuing. They were issuing a lot. And then they stopped. And now they just... Okay, very interesting. Alright, and that's 0, 0. So I imagine they don't have any new shares over the last few years. Where is it? Here we go. Yep, it's basically flattened out. Starting here. And it's almost negligible how much it's increased. Less than 1% in about a 4-year period, yeah. Alright, fascinating. Alright, that is the basic data right there. Alright, so good revenue growth. Alright, so based on the CapEx, they have spent a bit more, so that would probably explain low payout ratio. And then if they were writing off losses on the distressed real estate in the post-COVID era, that would probably require or prevent them from having to distribute as much as a dividend. That's what I'm thinking so far. It's good to see that you're doing good. Do you have any questions this time? My guess would be about the environment again. Oh, I need to fix this so that it is positive instead of negative on my chart. It copies as negative because on the cash flow statement, it's dividends are counted as an outflow of cash. So from the business perspective, they are a negative figure. But I think it makes more sense to represent them visually as positive. I should do the same with buybacks, actually. Buybacks are small. I don't expect that they change it a lot. It's just no more than generally little no more than 20 million. What's their market cap? Their market cap is probably small, 4.9. But yes, those buybacks aren't really changing things much. All right, so let me go ahead and get a basic article ready. Kilroy Realty. Figure out my subtitle later. Kilroy Realty. I'll put the full name. Corporation. And office REIT. I'll just do that as my filler text for now. Sometimes I really need to figure out how I feel about a company before I know how I want to introduce it. Dividends have been up. Total shares outstanding have been down somewhat. Let me look at how much their real estate holdings have grown. So they definitely took on more assets after the COVID crash, and they have continued to do so. Even as rates went up, they took up more assets. That is interesting, to say the least. So they're okay. That really is interesting. Gotta figure out what they're so confident about. What kind of office real estate do they own that they are still building up their balance sheet with assets, even as things got worse for office REITs? You want to do some investing. How much did I start with? So I would say, when you think about what investing is, it's not just having a portfolio. The moment you decide that you're just trying and get the most out of your money and start managing your risk is when you start investing. So you could argue that when I was working at Starbucks and living in my car, when I put the little bit of money that I had maybe $10,000, which you might be wondering why I live in my car when I have $10,000. It's because I didn't want to burn up that money. Because I was not consistently employed at the time. I put into a money market so that I could get a better interest rate than what was essentially zero in my checking account. You could say that's when I started, and I had about 10,000. That's when I was sort of like in that mindset. I didn't really get into learning about investing until the fall of 2020. And And at that point, I had, let's say, up about another 20K or so that I was going to start putting into a portfolio. And again, that I got by just working as much as possible. The law firm where I worked, I probably did a little bit of overtime every week, with the exception of just a few weeks throughout that time. So, I was doing everything good to print money for myself. And I was earning anywhere from, starting around, when I started there, about $11 an hour, and I eventually got up to, 15, 17, and then toward the end, I was making 25 an hour. So, but yeah, by that point, I'd probably been making about 11 to 15 an hour, and then just saving most of my money, as much as possible. And I don't think you really need a specific amount. I mean, you can just open a brokerage account, put cash in there. You'll get it put into a money market by default, and you'll get whatever the short-term interest rates are, which are going to be higher than what's in a checking account generally, unless it's a bank with a really fancy checking account rate. But generally, checking accounts do not pay high interest. Whereas the money markets are going to follow closely what the Federal Reserve does. So if the Federal Reserve has the federal funds rate around 5%, a money market's going to be pretty close to 5%. And that's where it's been for much of the past year. They just did a 50 basis point cut, so it's more like, I think, 4.5 now. And they've got another one coming up. So that's how they work. Technically, money markets are based on treasury bills, which are set by the federal government, but the central government is influenced by the Federal Reserve. So that's how that works. And if you just have, money in a money market account to get the best interest rate possible, because you want to minimize the impact of inflation over time, you've already started investing at that point. You don't have to buy a stock to be an investor. It just has to be some sense of maximizing your return while managing your risk. So whatever amount of money you have now is fine. Go ahead and open a brokerage account, get it set up, get it in a money market, and at least do that. Or I don't know what they might call it in Ireland. So I'm speaking from an American perspective. But if you need to figure out more, I would say you just talk to look up a broker in Ireland, or maybe an EU broker. Maybe there's this bigger EU system that regulates it now. See how they work. You can maybe even call them in and ask them, hey, can you help me set up a website? How does this work? There are technical differences, I'm sure, over there. And at least have it set up, and then you can see how the tools work. You can pull up a trade screen just to look at it and see how it works, and know what it's like if you want to invest in something, what a trade screen would look like, so that you know how to fill it out when that time comes. If there's already a stock you have in mind, or some other kind of investment that you can buy in a brokerage account, and you can go ahead and just put your money on that. The one thing I would say is that whoever is investing in stocks should keep enough cash for an emergency situation, for some liquidity. And if people don't have a cash position, they've got too much in investments. It doesn't really matter whether we're talking about an individual or a business. Everybody needs some liquidity, because if you just have like a weird accident, or you need some cash to put a fire out, you don't want it to be a situation where you have to wait to get your money out of the market, because it can be a few business days for transactions to go through. I'm not exactly sure how it works in Europe again, but just a good thing to keep in mind. You want to have some money aside, and how much you need to have aside just sort of depends on your situation. Like how much what is the fire that you're going to have to put out, and how expensive do you expect that to be? If you're an individual, it can be a few $1,000s. if you're a whole insurance company, and the fire you put out is a bunch of insurance claims, that could be billions of dollars. So it varies. Everyone needs liquidity. So yeah, investing is more of a mindset than it is just having a certain amount of cash and then putting it in stocks. It's looking at things and saying, okay, while I have this, how do I capture as much value as possible without screwing myself over? Let's go ahead and look at Kilroy Realty here. Financial reports, SEC filings. They have, here we go, presentations. When was the last time they did a presentation? That's a featured presentation. Well, it's November 2020. They don't have any presentations from this year? What are they doing? Well, this will at least give us an idea of where they were a year ago. Man. Okay, so mostly premier properties in these metropolitan areas, heavily concentrated in California. Okay. Best-in-class real estate in the most dynamic markets. Disciplined experience approach to capital allocation, fortress, balance sheet. Right. Oh, you're welcome. Let's see. Pursuit of quality in every aspect. Tenant roster comprises over 50% investment grade rated companies. High quality balanced portfolio. 65% office, 25% life science, 10% mixed use. Okay, so it's not just office. That might be an important part here. At least this is how it was a year ago. I doubt it has changed much, because it's not like people just change up a whole real estate portfolio. This is the concerning thing here. So they acquired a lot of real estate in 2021 when there was a boom in real estate transactions. And so things were selling for really high principal values. But they also dispose of properties. So they rotated things out of their portfolio a bit. Okay. Resurgence of large gaming technologies. Okay. Okay, so I see what they mean by premier now. These are like those fancy places that people like to work right when they get out of college. Those gentrified workplaces, it looks like. Do you like that? I mean, look how green it is. See that, WASF? It's so environmental. You've got to love these properties. I imagine they are terrible at keeping heat in these buildings. These are probably expensive for heating and air conditioning. Unless there's a type of glass that insulates well, but I don't know that there is. Okay, so let's see. Slowdown in tech layoffs coupled with increased office job postings will drive positive momentum. Okay, so they are connected with a lot of this stuff. These big tech companies with office locations in those areas. Oh, gotta get enough sleep, folks. Gotta stop staying up. By the way, WASF, do you actually think I'm a secret Republican, or are you just memeing? It sure is funny to think that I'm a secret Republican hatching a plot. I can definitely see it being a fun joke to make. Oh man, got this new laptop and I'm already getting fingerprints and stuff on it. I just hate to see a new laptop get wasted. You know what's cool about doing this as a business is that, you get a new laptop and now you can write it off. I don't know if that's how it works in Ireland, but in the US, if something's a business expense, you can write it off your taxes. That's why rich people often don't pay taxes. They just spend their money on something related to their business and they write it off. And ordinary people can't do that because when you go out and buy McDonald's, it's not a business expense unless you're an employer treating your customers to McDonald's, and it is a business expense. A morale booster. So yeah. So I wonder how much when rich people write off things to minimize their tax impact, I wonder how often that's because they spend it on something that ended up going to ordinary people anyway. Right? So how much of that, $2 billion write-off consisted of things like, free McDonald's or goodies for people that worked for them? It'd be interesting to find data on that. Not that I expect it to lie, but I just think that would be fascinating. You're 50-50? Well, if you really want to know the reason that I don't vote WASF, it's because I just don't really see myself as being part of the country in a sense. So, I am an American by technicality, but when I think about democracy being ruled by the people, I think well, what is the people, right? Who are my people? And if I can't answer that, which I can't come out and just say, oh, these are my people. It's not something I find easy to answer. I think, well, then what business do I have voting in an election? It's really that simple. Not a lot of people, I think, will find themselves asking that question, but that's the one I found myself asking at this point in my life. I basically don't take for granted that just because I was born here, that makes me one of the people. I think there's a bit more to it than that. Let's see. Plus, if I wanted Trump to win, I would just vote for him and try to make the case look as positive as possible for him. I mean, that's how you win elections. You don't win elections by tricking people into not voting. An election is basically it's a job interview with millions of hiring managers at once. Let's see. The shortage of high quality product. Okay, so they're giving us some idea of the cyclicality of the. This is total U.S., so this isn't just the West Coast market they have in mind. So I'm guessing if there's a shortage, that means they get to charge more rent. Strong financial position. I mean, it seems that way. Okay. Alright, decent enough. Not any slides I think would be good to put in my article, but does tell me a bit about the company. Let me go here. Yeah, so like, one thing I think that may make this difficult to understand for folks is, for example, in Ireland, um, you guys are more of a nation state, right? So it's much easier for just your randomly selected Irishman to feel that he's part of the Irish people, right? That's distinct people that predates modern polities. So you just build a state around that, and much of Europe formed along those lines. America is different in that, we often refer to our country as our nation, but we use the word nation a bit differently in that we are not a distinct people, with like a specific like ethno or linguistic background. I mean, we only barely ended up speaking English as a country. And so, what brings people together is this idea of participating in the European enlightenment through the constitutional system that we have here. But that's pretty vague. And as you can see, it leads to a bit of conflict every now and then. Just look at the nature of the 2024 election. I imagine our politics are much more partisan than in other countries, and not that I don't think it's stepped up in other places, but I suspect that's just because people are mirroring us. But yeah, if I go to France, there'll be people who'll be like, this is the nation of the French. Right? You talk about the origin of France, and they asked Charles de Gaulle that. He said he thinks that the start of France is when Clovis, the king of the Franks, took over Gaul, basically established his kingdom. So one of the great things about investing is it doesn't really care about your nation. You just need to be able to open a brokerage account and make some investments. I don't know how much you identify as an Irishman, WASF. I don't know how much that's important to you or still important to Irish people. It was clearly important for a long time, but it could just as easily stop being important. So I don't know. So let's see what they're saying here. Explanatory note. All right, there's a link to it. Self-administered real estate investment trust, active in premier office, life science, and mixed-use property types in the United States. Companies earn a global recognition for sustainability, building operations, innovation, and design. The company's approach to modern business environments helps drive creativity and productivity for some of the world's leading technology, entertainment, life science, and business services companies. We own, develop, and acquire and manage real estate assets consisting primarily of Class A properties in Los Angeles, San Diego, the San Francisco Bay Area, Seattle, and Austin. We believe we have strategic advantages and strong barriers to entry. Encompasses attractive, efficient buildings of high quality. Okay, I mean, it's not really saying anything. They have 121 buildings, 410 tenants, about 85% occupied, 86% leased. They have a few residential properties too. Okay. A few under construction. I don't know that there's a whole lot of specific things to learn here. They've had a 75-year presence in the West Coast markets. So yeah, I mean, they probably understand that real estate market pretty well. I'm looking here to see. A lot of this is just general elite stuff I'm saying here. Sustainability strategies. Here's the part you'll like, WASF. A resilient portfolio that minimizes the environmental impact of our buildings while maximizing the health and productivity of our tenants, employees, and communities. Look at that. Minimizes environmental impact. You know what minimizing environmental impact means? It means they don't want to fix climate change. They don't want to impact the environment positively. How could they? How could you? Oh, you're half French. You have a French passport. Oh, so that's why you complain so much. You seem like you were very judgmental of the world for an Irishman. But now I get it. It's the French half of you talking. Yeah, I figured if you were... Oh, hey, Brett. Man, speaking of French, oh boy. Thing is, the croissant is an inside joke. If you know, you know. But good to see you, Brett. Hope all is well. Have you voted yet? Did you hand our state over to the orange man? To the croissant man? I don't know why he's the croissant man. He just seems like he would be. I mean, do we really think Kamala is the croissant woman? Let's be real. Go, Brett. You just tell me. Which candidate is the croissant candidate? Okay. I think we all know who the croissant candidate is. See, that's the Irish part of you laughing. So you got the French part to complain and the Irish part to enjoy a good joke. Not a bad mix, all things considered. Yeah, and you know, when you think about it, right? There's two emotions implied by the names, right? Like the Franks. Well, if you're a Frank, then you're being direct and honest, right? You're blunt. And then Ireland, what does ire mean in English? It means anger, right? Which probably refers to the Irish being angry drunks. That's how they, when they're sober, they're happy. They're happy and well-natured, but when they get drunk, they become, irate, right? Irish. I know that's not what ire means. I know it's the same root as Aryan, like Iran, the Indo-European people. Anyone who wants to correct me. Voting for the father of Lisan Al-Gaib for sure. What? I don't even know who that is. Lisan Al-Gaib. Fuck, it's a Dune thing. Okay, that's over my head. I've only played 2 Dune board games. I don't know anything about the books or the movies. So I played as the Fremen in one of them. They're actually pretty good games, actually, very strategic. I'm guessing that the father of Lisan Al-Gaib is code for Trump, though. There must be something about Lisan Al-Gaib that makes his father the Trump equivalent. I don't know. Anyway, let's go back to the annual report. The sustainability strategies. Blah 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 blah. Oh, we're helping the environment. Please invest in us. Human capital resources. I often do not look at this stuff because it's rarely ever useful, unless it's retail sales. And then I look at, maybe how much they struggle to keep people. I read about an apparel retail store. I don't remember which one it was. It's one of those ones you find in malls. And they were saying, we have a hard time keeping people here. And we kind of need to keep people because they get familiar with the customer habits and preferences and can sell better if they stick around. But we don't pay them enough to do that. And I said, just not going to read any more of this. I know what I need to know. Nowadays, I would read more. So I could write an article and be like, here's why this stock sucks. They can't even keep their people. Ha 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 ha. I would laugh at them in the article. That's what I put in. The editors would approve it. And then Trump would be like, they are laughing at you. Laughing. Okay, well, strong communities and a healthy planet. Blech. Not helpful. This is just like a commercial in that what is supposed to be a financial disclosure. It's not actually help a whole lot. So risk factors, let's see. Global market, economic, geopolitical conditions could affect this. No kidding. It looks like these are just very vague and general risks. That we face significant competition. Okay. It's funny, almost every business I read, they say we face significant competition. This market is highly competitive. And then in their slideshows, they'll be like, we're an industry leader. There are high barriers to entry for this. It's hard to compete with us. I don't know. Like they just say it's very competitive to cover their ass. If they ever get sued by shareholders, they'll be like, we told you it's very competitive. What did you expect? That we wouldn't have to compete? That's your fault. We told you not to expect that. So sometimes companies give mixed signals like this. There are significant risks associated with property acquisition, development, and redevelopment. We may be unable to successfully complete and operate acquired, developed, and redeveloped properties, and it is possible that we may be unable to lease. They're telling us very, it sounds like this is obvious, and this is just a common thing. Just the reason I'm going over it is to let folks know. Risk factors often say really obvious things like that. There's a few risk factors that will be very informative sometimes. Mixed-use commercial properties. Okay, let's see. We currently operate and in the future may develop properties either alone or through joint ventures known as mixed-use developments. This means that in addition to the development of office space, the project may also include space for residential, retail, or other commercial purposes. Generally, we have less experience developing and managing non-office/life science real estate. As a result, if a development project includes non-office/life science space, we may develop that space ourselves or seek to partner with a third-party developer with more experience. If we do not partner with such a developer, or if we choose to develop the space ourselves, we would be exposed to specific risks. So they have less experience there. That's actually good to know. Okay, so screw compensation for prospective tenants. Joint venture owners could be adversely affected by a lack of sole decision-making authority. I mean, yeah, that's true. I find that joint ventures are usually a good deal, though, for folks. From what I have seen among the entities that do joint ventures, there's a lot of different businesses that will do them. But they're usually high ROE businesses. At my current rate, am I going to retire soon? I assume my current rate of earning or saving or wealth growth through the mixture of my investments and what I do as an analyst, I guess you could say. I mean, I am self-employed. I work as much as I want. I'm not at a point where I could do absolute zero, but it's very similar to being retired because I pretty much do things at the pace that I want. Even if I had enough money just to be retired, I would probably still do some work because I do like working and being productive. There's a part of it that's fun for me. And there's a lot of things I'm just itching to do. You can't create things just by playing around. Gaming has its limits. But I would say it'll be some time if we're talking about like retire in the sense of I can do absolutely nothing and still be fine. I would say I'll need a bit more time before that could be done. I could maybe in 5 years, if I, depending on how much I save and then how well my portfolio does, have enough that if I wanted to live a very sparse but doable lifestyle without working, I could do so and never have to work again. So it really just sort of depends on what retirement means. It kind of feels like in some ways I've basically retired because I know I'm not going to do any 9-to-5 work again. That's not happening, unless the culture of employment in the U.S. changes dramatically, which I don't expect it to do that because most of the signs are pointing it to continue to get worse. So that's what I think about that. Let's get back to this. The restriction agreement limited use of our properties, restrict our ability to sell. 14 office buildings on various land parcels in various regions, which we release individually on a long-term basis. Okay. 13% of our total stabilized portfolio on those leased parcels. These ground leases and other restricted agreements impose significant limitations on our use of the subject property. Okay, good to know. A decent chunk would be hard for them to turn over, but they are long-term leases, so that somewhat offsets it because they'll at least have rent for a while. Short-term liquid investments. This is another one of those things. Our property taxes could increase due to reassessment or property tax rate changes. Like almost anybody's taxes could change in a year, depending on what happens. There's an election right now. Everybody's taxes could change. What I think is interesting is people care more about paying less taxes than they do about having more potential, basically. People want a government to cut taxes. They don't want one that's going to unlock the potential of the U.S. This is a thing I noticed. There's this irrational hatred people have of taxes. Not that there isn't a time or place for giving people, tax break on something, or there are some things that are taxed that shouldn't be taxed. But the default mindset seems to be do everything you can to avoid taxes. The only way a government's gonna improve our standards of living is by cutting taxes. There's a huge just lack of imagination, especially because, like, when people get a tax cut, it could be maybe for a lot of folks it could be $1,000 or $2,000, and I don't think that's going to make a huge difference in their livelihood. I mean, you take over a saving period, that's an extra $30,000 they can put into retirement. If it compounds, maybe that's an extra $100K they have by the time they retire. I don't see how what would really help more, I think, is if they just saved more. Like, you could get a lot more done if you spent less and saved more. People want to keep blaming government for the fact that they don't have money, though. I mean, there are some people who are underpaid, but I feel like a lot of the people who say that they're taxed too much aren't always in that group, because the poor people, are in such a low income bracket that they're often not paying taxes. At least income taxes. They still pay sales taxes. So taxes, the reason I bring it up is not so much because I'm trying to get on a political soapbox here, but rather because as an investor, so many people are just, they're teeth gritting when the word taxes gets mentioned. Stops them from making sound investment decisions. You cannot let that get in your head. When people get angry at a system like, you talk about interest rates. It's been very often that when I've done streams in different areas or appeared on streams, people know I'm a stocks or investment guy. Two things people often ask are about Nancy Pelosi's trades and what I think of the Federal Reserve. And those are just things that make people angry and go, I hate the system. And when you're like that, you're not making decisions for yourself. You're not investing. It just makes you angry. It doesn't help you at all. If anyone was going to stop Nancy Pelosi or the Federal Reserve, they would have done it by now. Let's see. Loss of key officers, labor disputes, indebtedness. Okay, so they have an operating partnership as well. I need to go back and look at that. There are restrictions on the ownership of the company's capital stock. The opportunities for a change of control at its premium existing security holders. I don't see a whole lot here that make this a particularly complex thing. I'm trying to see things if I can find something that is very special or unique, but no, it just looks like this is a textbook route, and there's not a whole lot to know about it unless I was gonna basically get on a plane to California and just start looking at all these properties myself, doing a very deep investigation. But I'm not doing that for online stock analysis. Maybe if I were managing a fund, and we could get very cheap flights so that our expense ratio isn't too high, I would do more of that, but that's just overkill at that point. Peter Lynch loved to go around back when he was managing the Magellan Fund. He just went everywhere. He was a hardcore investor. Maybe that's a fun word to coin. Investor-gator, an investor who investigates. I'm going to put the croissants back up for a moment just because I like them. If you're wondering, why are there croissants? Who did that? What is this? Chicanery? Is that the word? I've seen it. Chicanery. Okay, what's it? The use of trickery to achieve a political financial. Okay. So, my financial purpose is to trick you with croissants into liking and subscribing to my channel. It's chicanery. Bam. I done did it. Okay, that's enough. Back to this. Okay, most of their customers are from the tech sector, and the next are life science. So this is, you might think life science is tech, but I think what they mean here is the Googles and the Microsofts, and this is people who do weird stuff in labs. Okay. Lease expirations, and again, this is for the end of 2023, so I'll need to look at the latest quarter in 2024. So they have pretty staggered lease maturity. Most of it's not maturing anytime soon. Most of it is maturing in the latter half of the next decade. So we want to count 2030 and out. But still, it's overall pretty staggered. Okay. So no dividend increase in 2023. Now let's go back here. There one in 2024. And there's not been a dividend increase yet. So had they been on a record of dividend increases? Is that what they had been doing? Let's see. So they had been. So the fact that it's slowed down, it's going to be 216 again if they don't increase it before the end of the year. They were really only raising it by a little bit. Well, they actually had a pretty decent rate of growth, high single digits, I guess. That 46% in the year? That's still not bad. Still pretty low compared to where it's been, though. So if rates get back down to 0, yeah, this could easily be up here. There's an easy double in this, I can foresee. Nothing else, at least into the 60s. You get about a 5% yield. So it's kind of like a money market where the dividend has room to grow and the principal as well. Not a bad investment, not a bad place to put money if you had no other ideas. Okay. Is there anything interesting in the earnings call transcripts? So I can give this a listen a bit later. Okay, it's interesting to see how this looks. And there's the delay in the portal on the screen. I think that's funny. It just keeps going infinitely. I don't know if there's a lot that's special to write about this. Let me open another Seeking Alpha tab. Maybe scout for some other ones that'll be good coming up. Wait, what? Did Kilroy disappear? They just got published. Oh my goodness. Look at that. They just got published. I can't get that $65 flat bonus now. That's lovely. That is. They didn't even say that they were in the queue to get published. Wow. Okay, well. I need to look at something else then. That is something else. Always annoying when that happens. Oh, there's another REIT here, so maybe I'll learn something from them. So let's go ahead and try them. I'll just keep the draft for the eventual future where I might cover Kilroy, probably sometime in February. So yeah, that happens sometimes. You gotta be quick. All right, so let me. All right. Go ahead and So I feel like doing a REIT today. REITs are pretty nice things to cover. And let's do PK. Get their information as well. Their data. Oh, they got hit hard by COVID. Hard. PK. So that's why it's good to check. Even though I didn't think anyone else was working on it at the moment, somebody went and published it. They beat me. I got sniped. Kind of sad, actually, that happened. But it does happen sometimes. I'm used to it by now. I'm doing pretty good for the month, though. I'm not really worried. All right, let's get some CapEx. Ooh, they had a big acquisition there. All right. I think I'll get their acquisitions in here. Might as well. Okay. Get the common dividends paid. Yeah, these recreation real estate REITs are interesting because they got hit hard by COVID. They've had to completely redo their portfolios. It started in 2017. Okay. So they were doing buybacks. Looked like they were doing a fair bit in some years. Oh man. They bought a lot in 2015 and 2019. I wonder where the stock price or the share price was around that time. Let's look. Of course, it was much higher around those points. Actually, this does not go back as a public company to 2015. So they were buying back shares, private shares. But yeah, 2019, much higher. Still not quite where it used to be. A 7% yield. What happened to their dividend? Ooh, look at that. That's smarts. Let's look at it on an annualized basis. Ooh, oh, the pain. The agonizing pain. Yep, that's what happens when COVID hits. All right, let me close this and make another one. Park hotels and resorts. Okay, just copy that, I guess. Oops. Need to not paste the formatting. Is a REIT. I'm back. All right, so interesting how the connection will go out a lot, and I had to like reset it at this coffee shop. All right, let me get the other data pasted. Because they have not been issuing common stock much, so I'm not even going to worry about that data. And shares outstanding. Looks like they went public in 2015 then. Yeah, okay. Or maybe, no, they probably went public in 2016, but this probably would have been the private share equivalent. That's my guess. Probably an operating partnership, and they started the public REIT to convert the ownership shares into public units. That's my guess. Okay. Oh wait, that's right, because it doesn't go all the way back to 2014. Drag it down. I'll actually just go ahead and delete this row since basically it has a gap. Okay, so let's take a look at the visualized data. Yeah, so revenues are basically back to where they were. As our... Oh, I got to add funds from operation. All right, go here. Oh, they have gaps in it. Ooh, I'm going to have to go and pull it manually. That happens sometimes. Okay. Oh, I'm being dumb. I pasted the whole thing. Or copy the whole thing. Let me just do 20. Okay, so yeah, most of it is not there. All right, so the revenues are back to about where they were. Cash dividends are not. Need something about the operating expenses change. Let's see. There's other revenue here. Other revenue. Okay, I'm not sure what the other revenue is. That'll be worth checking out. When I look at when I'm pulling the FFO data. Property expenses about the same. About the same. About the same. Looks like interest expense is higher. Yeah, net interest expense is up, not a huge amount. What else would be? Minority interest. Okay, gotta figure out what's going on with funds from operation then. That is the mystery here. At least there's something to poke at. All right, doesn't look like anyone else is in. Well, it's been a decent work session. I got some other things that'll be coming up in a bit, so I'm gonna go ahead and end the stream now, and hopefully StreamYard will actually have the full premium features at that point. So, see you guys.